Hello, and welcome to the Weekly Watch podcast series. I'm John Briggs, Global Head of Desk Strategy. This series helps you cut through the noise of global financial markets with a quick take on the upcoming trends to watch. This is our first Weekly Watch podcast for the year, and I want to start off with a few main broad points to kick off 2021. Two recent risks have passed to start the year: Brexit and the issues surrounding additional U.S. fiscal stimulus and a possible government shutdown. On Brexit, the late December agreement takes away the near-term risk, and while there's still ratification issues, both in Europe and in the UK, we can thankfully put that a bit on the back burner for the moment. As the British government itself noted, we expect some, quote, bumpy moments in the weeks ahead, but for now, the large downside risks have been curtailed. And as we've seen, sterling has reacted positively, though moderately, as some sort of deal was generally priced. We had seen as much of a 75% chance of a deal as recently as a few weeks ago, despite the negative headlines. On the U.S., the passage of almost $1 trillion in aid as part of a larger budget reinforces one of our main themes, Fiscal Forever, which is indeed the title of our year ahead publication. As a reminder, this theme broadly leads to steeper yield curves in both the U.S. and Europe, supported break-evens, better risk assets in general, and a weaker dollar. However, additional fiscal spending in the U.S. will be more difficult to come by, no matter what happens in the Georgia Senate runoffs this week. This accentuates our view that along with relatively poor performance with the virus, U.S. underperformance is an ongoing theme both economically and through asset prices. This is most clear in higher eurodollar, treasuries outperforming bunds, which leads to narrower treasury bund yield spreads, the latter of which is accentuated by the specter of Fed potentially extending the duration of purchases early this year. Speaking of regional differences, Asia continues to be the regional outperformer in our view, as the ongoing global manufacturing recovery and overall outperformance on the virus in Asia means we continue to favor Asian FX. We continue to expect growth differentials to join COVID differentials, leading to a better performance against the dollar. In fact, we favor EMFX in general, though there will clearly be relative winners and losers here, so see our recent work for the favorites. But again, the idea of differentiation here is key, and is likely to be the key for early 2021. Lastly, in a year that we expect to be dominated by differentials, we're also now closely watching vaccine distribution and efficacy as a potential leading indicator for future relative strength of recoveries. It's very early in the process, but while the headlines are dominated by the post-holiday case waves, again, worse for the US than Europe and certainly Asia, whoever's population makes the fastest progress towards herd immunity may be the real difference maker for early 2021 for forward-looking markets. Something we're going to be keeping a close eye on. Data so far is limited, but we think this will be key going forward. I hope you have enjoyed this episode of the Weekly Watch. Please subscribe to our channel to get future episodes. We also encourage you to explore more of our content on our website and other social media channels.